Welcome to PyUncut, where we break down the biggest stories in tech and markets in a way that actually makes sense. Today's story is fascinating because while the world has been obsessed with Nvidia, AMD, and Broadcom, a lesser-known company is quietly outperforming all of them. And not just slightly outperforming, but absolutely crushing them in stock returns. Let's talk about Corning, a company that most people associate with smartphone glass, but is now emerging as a hidden powerhouse in the artificial intelligence revolution. Now here's the headline that should grab your attention. Over the last 12 months, Corning stock has surged more than 300%. In comparison, Nvidia is up around 70%, Broadcom about 100%, and AMD roughly 160% in the same period. So the big question is, how is a company known for glass suddenly beating the biggest names in AI chips? The answer lies in something most people overlook when thinking about AI. Everyone talks about GPUs, but very few talk about the infrastructure that connects those GPUs. And that's exactly where Corning comes in. Artificial intelligence today runs inside massive data centers. These data centers are filled with GPUs, CPUs, and memory systems that need to communicate with each other extremely fast. The faster the communication, the better the performance. Traditionally, these systems have been connected using copper cables. But copper has limits. It's slower, less efficient over long distances, and generates more heat. As AI workloads become more complex, those limitations become a serious bottleneck. This is where fiber optics take over. Corning is one of the global leaders in optical fiber technology. Its cables can transmit data much faster, over longer distances, and with minimal loss compared to copper. And in the world of AI, speed is everything. Think about it this way. If an AI model takes longer to process data, companies pay more for compute time. Faster data transfer directly translates into lower costs and better performance. That's a massive incentive for companies to switch to fiber. And they are switching fast. Corning recently introduced a breakthrough product called multi-core fiber. Instead of a single data channel, this technology packs 4 cores into one fiber strand. That means 4 times the capacity using significantly less physical material. In practical terms, this reduces the amount of cabling needed in data centers by up to 75%. That's not just an efficiency improvement. It's a game changer for scaling AI infrastructure. Now let's connect this to the bigger AI story. Modern AI models, especially the latest generation, require massive data movement. They don't just process simple queries anymore. They perform complex reasoning, which means they need to move and analyze much larger datasets in real time. This shift is increasing demand, not just for compute power, but for high-speed connectivity inside data centers. And Corning sits right at the center of that trend. The numbers tell the story. Corning reported around $16.4 billion in revenue in 2025, with its optical communications segment contributing over $6 billion. More importantly, that segment grew at about 35%, significantly faster than the rest of the business. Even more interesting is what's happening within that segment. The enterprise part grew over 60%, and revenue from hyperscale customers more than doubled. Who are these hyperscale customers? Think companies like Meta, Amazon, Google, and Microsoft. The same companies building massive AI data centers. In fact, Meta has already signed a deal worth around $6 billion to buy fiber optic solutions from Corning for its AI infrastructure. This tells us something very important. The AI boom is no longer just about chips. It's about the entire ecosystem, including networking, power, cooling, and connectivity. And in this ecosystem, Corning is becoming one of the key enablers. Now let's zoom out and look at the semiconductor industry as a whole. For the past few years, Nvidia has dominated headlines because of its GPUs. Broadcom and AMD have also benefited from the AI wave. But recent trends suggest that growth is starting to spread across the entire semiconductor value chain. Even traditional chip makers are now facing new challenges. Some analysts are warning that companies like Broadcom and Nvidia may need to invest heavily in building AI infrastructure, including data centers themselves. This is important because it shows that the industry is evolving. It's no longer just about selling chips. It's about supporting an entire ecosystem that enables AI at scale. Meanwhile, companies like TSMC are seeing massive demand, with revenue jumping over 35% due to AI chip orders. So the AI boom is real, but it's also expanding into new areas. And that's exactly why Corning is outperforming. It's not competing directly with Nvidia or AMD. Instead, it's benefiting from every AI data center that gets built. Whether it's Nvidia GPUs or custom chips from Broadcom, all of them need high-speed connectivity. Corning is essentially selling the highways that AI traffic runs on. Now let's talk about valuation, because this is where things get interesting. After a 300% rally, Corning is no longer cheap. Its price-to-earnings ratio is actually higher than some of the big chip companies. This means the market is already pricing in strong future growth. However, the company is projecting significant expansion. It aims to add about $11 billion in annual revenue by 2028, with a large portion potentially coming as early as 2026. If that growth materializes, today's valuation might actually make sense. But there are risks. First, the stock has already had a massive run. That means volatility could increase, especially if growth slows down. Second, the AI infrastructure boom itself could face challenges. We're already seeing concerns about the cost of building massive data centers and whether demand will keep up with supply. And third, competition in fiber and networking could intensify as more companies try to capture this opportunity. So where does this leave investors? The key takeaway is that the AI revolution is bigger than just GPUs. It's creating opportunities across the entire technology stack. Corning is a perfect example of this shift. It's not the most obvious AI stock, but it's one of the biggest beneficiaries of AI infrastructure growth. For long-term investors, this highlights an important strategy. Instead of focusing only on the biggest names, look for companies that enable the ecosystem. These companies often have strong growth potential with less direct competition. In the near term, watch for a few key catalysts. One is continued data center expansion by hyperscalers. More data centers mean more demand for fiber. Second is new product adoption, especially multi-core fiber, which could drive higher margins. And third is new long-term contracts like the Meta deal, which provide visibility into future revenue. To sum it up, the semiconductor story is evolving. Nvidia may still dominate headlines, but companies like Corning are quietly capturing value in the background. And sometimes, the biggest winners in a tech revolution are not the ones you expect. That's it for today's episode of PyUncut. If you found this breakdown useful, stay tuned, because we'll keep bringing you the stories that matter in tech and markets, explained in a way that actually makes sense.